Yeah, hello guys, welcome to my YouTube channel. So today we are going to do a breakdown to answer a question that was asked on the comment section about how do you take the confirmation entries. So we're going to do a breakdown on a backtest on USDJPY. Yeah, to answer the question, and I hope the session will be insightful. So we are going to start from the weekly time frame. Let's come and cut price around let's cut price around here. So on the weekly time frame, when you look at these areas, which is your nearest area of liquidity, we are on the weekly time frame. You're going to use the time frame coordination of weekly. We're going to use the time frame coordination of weekly. Let me use text. Weekly, then we go to the 4-hour. Then we go to the 4-hour, then we go to the 30 minutes time frame. 30 minutes, then we take on confirmation of M5. So that's the time frame coordination that we are going to use. If you do not know about the time frame coordinations, you can look at the previous videos and you'll understand why we are using this time frame coordination. When you come to the weekly time frame, which is the nearest area of liquidity that we are having on the weekly, we have this week overlap. Why are we using this overlap? Because when you go to the lower time frame, you're going to find a structure that looks like this. A structure that looks like this on the weekly. This is a structure on the lower time frame, this week overlap. So let's go to the 4 hours time frame. So on the 4 hours time frame, we can see that area we had a structure which actually was, let me delete this analysis first. The last break of structure that we had was on that structure. So this was our range low, that one was our range low, and this one was our range high. So this is a strong low. Why am I saying this is a strong low? It's a strong low because it initiated a break of structure, and we can see that price did not come to mitigate these areas. These areas, they are very fresh. We can see even after price buying to these levels, we are not having any deep retracements. So we can say that we are trading within this range, that range low and that range high. So that's our strong low, that's our weak high. It's a weak high because it's the one that we anticipate price to come and take out. Price goes forming a series of higher highs and higher lows like that. So we anticipate, right now we are in this phase. Price has come and printed a weak high, a strong low, anticipating price to come and retest back so that we can take those buys on the discounted prices. Then our target is the external range liquidity, of which is the high. So on the 4 hours time frame, when you come to the 4 hours time frame, we expect price to come at least to this deep discounts to come and mitigate. So this is where I go to look for my liquidity engineering. I'm going to look at it on the line chart. So on the line chart, I can clearly see that my liquidity engineering was right here. I said on the previous video that liquidity engineering, I'm supposed to see something like this. So when price retraces back, I'm anticipating price to come. I'm anticipating price to trade at least to these levels so that we can take our longs from this level to the external range liquidity. So let's say we've already marked our 4-hour liquidity engineer. So we had that 4 hour purge. We had price purge that for our liquidity engineer. So after seeing that, I want us to go. We came from the weekly time frame. Now we're on the 4 hour, and on the 4 hour price has already passed the engineer on the 4 hours time frame. So I want to go and see a shift on the 30 minutes time frame so that I can take an entry, or so that I can take an entry on the 30 minutes time frame or a confirmation entry on M5. So when I come to the 30 minutes time frame, let us mark the structures. So we are having price was breaking structures to the downside. So that was our strong high. That one was our strong high. We had that break of structure. That was the low that was printed. We had the price retrace back to the discounted price. So it printed another strong high, and it came and broke this area with a full body candle. After breaking this area with a full body candle, our strong high price went and broke that area again. It went and it came and traded above the last strong high that we had, making a shift, doing a shift on a full body shift on the 30 minutes. After having that shift on the 30 minutes, it confirmed to us that price is no longer bearish, it's now bullish. And when you come to the 30 minutes time frame, I can come and study price from here to here. I want to see another liquidity engineer that I was having. So here, this one was a break of structure. And when you're doing this, we must make sure that price did a full body close to the downside. Don't consider this a shift if we had a weak break on this level. So on the 30 minutes time frame, input my line chart. I had my liquidity engineer right there. So if I had my liquidity engineer right there, I can consider to take my buy trade from that level, stop loss below there. My first target should be the external range liquidity, but also we are considering the 4 hours time frame, the external range liquidity on the 4 hours time frame, which is this one. So let's go back to the 30 minutes time frame. So we can clearly see that this area, we also had a shift on the 4 hours. We also had a shift on the 4 hours with the full body candle. That shift happened there on the 4 hour shift. I've marked that 4 hour shift on this level because this is where we had a full body break, a break of structure. On the 4 hours, we did not have a full body close on that low. So let's go back to the 30 minutes time frame. So we already have two confirmations. We have a shift on the 30 minutes and we already have a shift on the 4 hours time frame. This area is also a free zone. We can see that price did not mitigate the extreme zone. So we are on the 30 minutes time frame. So on the 30 minutes time frame, you can see that price had that purge, but let's say you needed more confirmation, because sometimes you can see that price can come and violate this area. Price can come and violate that area. This is where now you go to the 5 minutes time frame to look for more confirmation for you to take that trade. So you can go to the 5 minutes time frame and look for a full body shift and look for a shift to the full body. So when you come to the 5 minutes time frame, you can see that, let me use this drawings right here. When you come to the 5 minutes time frame, you can see that price did a full body break to the downside. Did we have a full body break? When you go to the line chart, we can see that price did a full body break. On the line chart, we had that full body break. We also had this break here, right here. You can see that we had a certain structure right here. We had that structure right there, and price had already taken out that structure. So we can consider that as our shift, or this one is our shift in the 5 minutes time frame. So our shift, our break of structure to the downside. And when we put the line chart again, we can see that we had another liquidity engineer right there, right? So your entry right there, your stop loss below the swing point. So your stop loss below there, your entry right there. So you come and you refine your entry like that. So that's how you take a confirmation entry. Let's see. So 10 pip stop loss, and our target is the 4-hour external range using the time frame coordination. Good, the 4 hours time frame. Yeah, so now you're targeting the external range liquidity of that range right there. So that's how you take your confirmation entries using that strategy. So if you're new to the channel, consider subscribing and like the video, and if you have a question, you can drop it on the comment section so that we can do another video about it.